and the federal government says, oh, it's illegal, we still want you to pay your taxes, but we're not going to let you, we're going to make you pay your taxes on way more than what we make everybody else pay their taxes on.
Any other business, correct. Absolutely.
Okay.
It is highway robbery.
I think we've scared everybody off at this point in the cannabis space. What's up, all you cannabis aficionados? This is Art. Welcome back to another episode of Connecting Cannabis. Today we're joined by the lovely Sonia Luna. How are you, Sonia?
Great. Thank you for having me.
Of course. Thanks for being here. We're at WebJoint HQ, by the way. How about you tell us a little bit about yourself and what you do in the industry?
Thank you. So I am an accountant in the cannabis industry. We've been servicing it now for a few years, and we are just so grateful and excited to still be part of this industry.
So I'm assuming you weren't always an accountant for the cannabis industry, right? So why don't you tell us a little bit about your journey and how you got into the space and what made you decide to do cannabis?
Great question. We got introduced to the cannabis space a little over 3 years ago. There was a colleague. He was a securities attorney. He had a cannabis client, and that client needed some assistance in understanding some of the financial activity with one of his operators. He had owned a chain of dispensaries in West LA. After that engagement, my associate friend, the securities attorney, told me, hey, look, A, you got a knack for accounting. B, you know how to get straight to the point on some issues. And number 3, he thought it was going to be an expansive, explosive industry. And from that, it just snowballed for me to research the industry, understand who are the key players, and more importantly, the types of people I was going to interact. And since then, it's actually the people, their stories, their mission that keeps me in it still today to want to service the cannabis industry.
So you said 3 years?
Yeah, well, roughly around 3 years.
I mean, you got to see the transition between, gray market, California industry to what it is today in those 3 years, right?
Right. It's been a whirlwind. I think a lot of people would admit that, especially with, as you are very familiar with, on some of the final regs when they actually came out. I think some agencies are still trying to figure out some of the nuances for different types of transactions. So I've seen it from, let's say, a gray medical market, let's call it that, now to a full compliance type of market, and more importantly, adding in a nuance that a lot of the other states don't have, which is a licensed distribution center, which is also very exciting in California.
And besides being an accountant for the cannabis space, you're also an investor in the cannabis space, right?
Yes, I have put my money where my mouth is, so to speak, and I've invested in the ZPen. My why, my passion for even being associated with the executive team is it worked for me. I have trouble sleeping. I think a lot of professionals who are just going through their day-to-day have trouble sleeping, and I found this to be just a wonderful product that worked best for me. So I'm super excited. I'm very grateful this team has invited me to take on this journey. So I'm really excited about ZPen and where it's going.
You're a cannabis business in this space and you want to get set up, right? So as any business, you need funding, right? Or you need a loan, right? So step one, you need to get a loan. How does that work in the cannabis space?
Yeah, let's talk about that. And imagine it's a cannabis delivery company. They may find some very friendly lenders for the vehicles. So there's financing arrangements usually available for cannabis businesses like that. But let's take a look at the inventory, right? You want to have enough inventory to, let's say, help your customers and patients get access to different inventory products. So you want, 3-6 months worth of inventory potentially in a warehouse. That type of financing is a lot more difficult, and more importantly, it's way more costly. So the industry is going through a state of flux. They're seeing, cannabis delivery companies are seeing interest rates related to financing in the double digits, let's put it that way. Whereas other industries don't have nearly as much of an interest expense to deal with. Just the day-to-day, they might get a better interest rate, but unfortunately, we don't have enough banking right now for the cannabis industry.
And so who's actually able to give out these loans? There's still people doing them, right?
Even
though they are high interest?
Most of them are hard money lenders. There might be some other private investors that will finance a deal. There was a study that's done every quarter. FinCEN is a department within the U.S. Treasury, and they have some keywords that they search for when it comes to cannabis banks, believe it or not. They're credit unions, other financial institutions. And so every quarter, they're monitoring who's actually admitting that they're banking the cannabis industry.
Interesting.
And so if you took a look at those quarterly reports, let's say 2 years ago, you would see less than 200 admitting it. Today, it's a little over 400. Now, when people look at the percentage of increase, right, you go to 200 to 400 in a span of over a year and a half, people think it's big. And then I remind them that, look, there's over 12,000 chartered banks, financial institutions, credit unions, so we're not even 1%.
Wait, is this in the state of California, or is this all throughout the U.S.?
The entire U.S.
Oh, wow. Okay.
The entire U.S.
Wow.
So it's a very small percentage of banks and credit unions that are actually taking on cannabis clients, but there are some.
Loans, super high interest rates. That's step one of what you're dealing with. Banks, very little banks that are actually going to help you open a business. And what are kind of like the rates with the banks? How do those look?
For the credit unions, they're moderate to lower risk type of interest rates. So to give specifics, you're looking at less than double digits, so something between 8 and 9% is some of the norm. If it's a higher risk and the bank or credit union thinks it's a higher risk, usually it's not based on the industry itself, what they're doing. They're looking at the operators and if they have bad credit. And therefore, the bank or credit union that is willing to bank them starts increasing that interest rate, not because of the actual business they're in. It's the risk factor of the actual operators, and they'll go up to 12 or 15%.
Got it. Okay. And then not to mention, it's like a lot cash-based transactions, right? So these businesses are literally, driving trucks of cash to these banks, right? And so, like, how does that work? Like, what are some of the difficulties you're seeing? Some of the challenges with them operating like a cash majority or cash only business?
I see the problem in two different segments. So one is just dealing with state regulators. A lot of the clients that we've been working with, they lack, let's say, the button-down controls. Those are just checks and balances of cash. We highly recommend clients buy a money counting machine. To make life easier.
Like in the movies.
Like in the movies, yeah. Make it easier, more transparent. And so at the state level, a lot of our clients are paying those taxes to the CDTFA in cash by making an appointment. So it takes a good operator to really hone in on a checklist. I hate to use the word checklist, but like, did I do this? Did I do this? Et cetera, et cetera. On the federal side, a lot of the operators that we have just been having conversations recently, especially cannabis dispensaries and distribution companies that are vertically integrated. I try to remind them that the U.S. Treasury has a rule about obtaining cash that is equal to or greater than $10,000, and you have to track that. So having a policy and a procedure in place where you're monitoring that every 2 weeks is a little onerous, but that's how I see cash compliance at the federal level. Some companies may not be impacted as much because they're dealing with multiple customers, and they're not one customer will ever be given that amount of cash.
Yeah.
So it really depends on a case-by-case basis.
Yeah. That's interesting, though. So I actually heard that as well. They're literally driving trucks of cash to the tax office and like paying their taxes all with this cash, right?
Right, and what's funny is I think some of these operators, we've heard people say, well, I'm done. And I said, no, you understand that it's only a receipt that they received it on that date. They're not actually admitting that you deposited that amount of cash. It usually takes 1 to 2 days for you, the owner, the operator, to get a receipt that they admit that actually was the amount that was deposited. So somebody's got to do the follow-up.
Okay, so let's say you face those challenges, you got set up. You're in business, you got a high interest loan, you got a bank account that has incredibly high service fees, but at least you're operating, okay? And now you have to make sure that you're paying your taxes correctly and you're collecting your taxes correctly. And kind of the nightmare that we see, the other software company, WebJoint, especially focusing on the delivery industry, is I think they got it the worst. Like they got it pretty bad, right? Why don't you kind of fill us in, what is the challenges that you see delivery specifically facing with taxes in California?
I Completely agree with you. I think the delivery service model has the highest burden of tax compliance than any other model in the cannabis industry. So if I had to break it down simplistically to a layperson, I would say, imagine you're running your business and you have patients that need their medicine, and you're about to deliver that medicine to that patient, and they're in a certain city. Let's just take West Hollywood, for example. They themselves, the city of West Hollywood, has their own local taxes, and they have their own way of treating, let's say, a promotional item. How do they want to tax that? West Hollywood has their own specific needs and wants for taxes. Then the state has their own specific needs and wants for their taxes for promotional items and how you're going to calculate sales and use taxes, etc. Then you go to a different jurisdiction and you're going now, let's say, to Chatsworth or some other local area, Van Nuys, and the taxes again change. Okay, so one is it's not the same rate in each jurisdiction. Number two, there's going to be changes. Each city is going to start making these changes, and how they make these changes happens at a different timeline. Okay, then the state has their own way of making changes in taxes. So they can recreate what's called the markup rate every 6 months. They're allowed to change it, and that impacts your excise tax and a bunch of other taxes. So not having a great software product, like we've discussed, this WebJoint does a great job at this, it just overcomplicates things for the operator. So you really need a good software partner to be mindful for you, to manage all of these tax expectations and allow your accountant to run reports so that they can actually have backup to that tax report that they have to submit. In some jurisdictions, they want you to report it every quarter. Some of them want it once a year. Again, having that right software partner to help the accountant get those books and records right and also be auditable or be audit proof is critical for delivery businesses.
Definitely. So I recently wrote a blog post about the absolute shit show that cannabis tax is in California. And so just to kind of recap off of what you said, there is the excise tax, right? So it's a 15% markup on a 60%. 15% tax on a 60% markup. So that's how complicated it is. And then the markup changes every 6 months.
They're allowed to change it every 6 months if they want to.
So then you got to keep track of that. And then you have sales and use tax in every different city. That's different in every city. And if you're a delivery service, delivering to 20, 30 different cities.
And then we didn't even get into adult recreational use versus medical use.
Right.
So medical patients get a little bit of a discount, but not 100% of a discount.
Yeah.
They still have to pay their excise tax. So some cities won't even tell you, and I've made phone calls, by the way, to say, what's your policy for a medical patient for sales and use and other types of taxes, your cannabis taxes? Are you going to be as strict as the state of California, which says they must have a state-issued medical card?
Right.
Or are you going to be lenient and allow that patient just from a prescription from their doctor and therefore not collect taxes because of that prescription, and there's no need for a state-issued medical card?
Right.
And you can't believe the different answers I've gotten. So it's not that easy.
So then you have medical people sometimes not paying sales and use tax, and then sometimes paying it. And then if they purchase a cannabis item, sometimes they're paying it, sometimes they're not. If they purchase a non-cannabis item, they're paying it 100% of the time.
Right, sales and use taxes. I know, it's almost like you need, remember in college you would have like this decision tree flow. If this, then that, if this, then that. And that's why I remind cannabis delivery companies, you really need to get with a partner that's already built this in the software package. The solution's there.
Right.
Don't try to reinvent the wheel. You're going to just make yourself go crazy over taxes.
Right.
It doesn't make any sense.
If only there was one software company in the world.
And there is.
And you have like delivery clients, I assume, right?
Yes, we do. They have a whole fleet. I think they just started with 10 and they're ramping up hopefully to 100.
But it's one thing to kind of, you're supposed to know on the spot, depending on what city you're delivering into, what type of person, medical or adult use, what products you're selling, et cetera, et cetera, et cetera. What are you charging for tax, right? and then you're gathering that information, and then you have to at some point submit that to the cities. Right? So how does that whole process work? And you're the one kind of keeping track of that for them?
Right. So for each type of client, we try to figure out where they're actually doing business, and then we kind of create a checklist just to hone in on the due dates and then how they're going to make payments, and then who within the organization is going to make those payments, who's going to take on the responsibility of making those appointments if they're going to make them in cash. Some clients are even going through the route of getting money orders, taking that cash and actually going to the post office and getting some money orders to pay those taxes, let's say, dare I say, through the mail. But it can be done. So it's a pretty big problem.
So that's if you're selling your product regularly. And we didn't even get into promotions or a loyalty program or like a buy one, get one or things like that, right? So how does that work? And how do you what do you recommend to your clients when they want to do things like that?
So I first try to understand who their client base is and make sure that they have a good understanding of the key reports that I need as an accountant for those loyalty points. The best way I've tried to explain it to cannabis, especially some of the delivery clients that we have, is imagine those points accumulate. That's a promise. That's a commitment that you made to your customer. And that commitment was you made them a promise that they would get something of value. The question is, what's that value? Some of it could be promotional items that are cannabis-related items, meaning a deep discount. There's going to be some tax consequences where some cannabis delivery companies don't realize that the state or local jurisdiction doesn't care that you discounted it to a penny. They still want the full value of what you originally purchased it at from the distributor, okay, for their taxes. So that's one aspect. The second aspect is, let's say it's a non-cannabis item and it could be paper, it could be a grinder, what have you, etc. Those have value. And so at the end of the year, your accountant needs to know what kind of promises did you make to your customers? How does that convert into a dollar value to a myriad of different products or items that they could potentially take an opportunity to convert those points into? And that's considered a liability from an accounting perspective. So I just mentioned two aspects. One is the tax aspect of a loyalty program. You have to make sure you're working with the right software product that can discount it, work out those points, make sure the metrics work out properly for the taxes. And then number two, at the end of the year, when you want to just get a big summary of where you are with your loyalty points, it's a math problem. You're taking all those patients, you're looking at the industry trend right now of who will actually use those points to convert to something of value, a t-shirt, the paper, or the grinders, etc. And then you're multiplying that out to actually what you are offering them. So there's a percentage of people that actually will never use enough points or accumulate it. And then there's other people that will be active and they will convert those points into actual product and value that they want from you. Therefore, at the end of the year, your accountant needs to record that potential liability because it is a commitment that you made to your customer.
So you need a really, really good accountant, essentially, is kind of what I'm gathering here, right?
Or somebody who's at least knowledgeable enough to kind of walk you through why you need to record that liability,
right,
where the source is, working with management on what percentage of patients actually will convert into changing those points to an actual item that you made a promise to them.
Right.
And then on the tax side, that's just kind of, for most operators, it's a no-brainer. They understand that they really need to make sure.
That's, it gets really cannabis specific in that end as well.
Yeah.
Okay, I mean, that's actually a great segue too. So 280E, we kind of touched on that in the beginning of the video or the interview. Why don't we, kind of explain to us what is 280E? It's also, directly related to cannabis, and what headache does that cause for the cannabis industry?
I really feel for the cannabis delivery folks when it comes to 280E. When I look at cultivators, I don't feel as bad. So what is 280E? 280E is a section of the IRS code, and it stipulates that if you're in a business that is considered to be federally illegal, so cannabis is, those sales, what can you put on your federal tax return to pay your income tax to Uncle Sam? You can deduct your cost of goods sold. So what is cost of goods sold to a cultivator? Well, if I'm a farmer, my soil, nutrients, labor costs, everything, right, that I'm putting into that building, that plant, a lot of it is just to get it to its final state where I'm about to harvest. So a lot of it's going to be cost of goods sold, all those expenses, those business expenses, okay? So when I look at a farmer or a cultivator, their federal tax rate, and what that is what is Uncle Sam going to charge for their income tax on that farmer? So we call it in accounting world an effective federal tax rate. So farmers could be between 25 and 35%. When you go to cannabis delivery, right, the opposite end, right to the consumer, what's their cost of goods sold? They're buying it from their distributor, and the way the federal government typically sees it is, well, you bought it, that's a final packaged good that's been tested, proven to enter into the marketplace, that's it. So you have sales and what you purchase that product, but think about their business model. They've got drivers, they've got advertising costs, they've got insurance costs, a lot of other costs associated with running their business that the federal government just says, I'm sorry, we understand that's part of your business, but it's not part of the cost of goods sold. Therefore, cannabis delivery companies have the worst end of that federal effective tax rate. Their tax rate is between 45%, 65%, and you look at the farmer, and he's between 25 and 35, right? It's a very disproportionate, they're just completely disadvantaged when it comes to the taxes.
It's highway robbery.
It is.
It's essentially what it
for
is.
no reason,
Yeah.
really.
So you have the state of California just taxing everything they possibly can. The city's taxing everything they possibly can. They don't make it easy for you to figure out what taxes you're supposed to be charging and what taxes you're supposed to be paying and when and how you're supposed to be paying it. They won't give you banking, so then you're doing everything in cash. And the federal government says, oh, it's illegal. We still want you to pay your taxes, but we're not going to let you, we're going to make you pay your taxes on way more than what we make everybody else pay their taxes on.
Any other business, correct, absolutely.
Okay.
It is highway robbery.
I think we've scared everybody off at this point in the cannabis space. Okay, so let's continue scaring people. How about compliance costs, right? There's some stuff associated with that as well, right?
Right, and compliance costs, so if we move away from just, let's get rid of the tax process of paying your taxes, which is a compliance process. Let's just get into reporting to the state. So each state has their own reporting requirements. So let's just take California, for example. They have a metric, and you have to upload the data eventually up to metric, and the state owns that data. They're going to review it, analyze it, and what I've told our clients is metric itself, to get training on it, doesn't take 8 or 12 hours, okay? But I want you to please budget a full week to understand metric, not by just understanding how the software gets turned on, how you export data and upload data. Those are just a handful of hours. What I'm asking them to do is understand the process of their business and when things change, not according to plan. For example, we all know in retail that sometimes product goes missing, right? Or it gets damaged, right? Not according to plan. So how is that business going to handle the compliance reporting requirement back to metric? Do they really know who's doing what? When is it going to get approved? How does it get uploaded? All of that, has that really been flushed out in the business process for that business before they upload it to metric? The second thing I mentioned to cannabis licensed businesses is, remember, you cannot delegate the liability of that data to someone else. When you sign up on the terms and conditions with the state of California and you're uploading data into metric, you can't go and say, you know what, it was so-and-so's fault. It really wasn't me. The state doesn't see it that way. They say, you're the licensed operator, you are the executive. Actually, the liability does fall on you. So when I say budget a week to get to know metric and all of your processes to comply with it, that is another reason why, that's the second component of why I ask them to spend at least about a week to really hone in on what they need to do for compliance.
Are you seeing these businesses also hire on additional staff just to take care of their compliance?
Yeah, there's a new emerging title. It's compliance officer. Some people call it like an operating officer, which has a compliance component. But it is a new title that I'm seeing in the marketplace.
So that's costing them money too.
Exactly, another human being in there.
So why are we even in this industry? Like, why is it so expensive? Like, is how people are making money, or?
What I tell operators is when you look at inventory, right? Usually there's a bonding, there's an attachment, And most of the people I've met had a passion of getting into the industry without the money component.
Right.
It usually was a friend, family, themselves. They see the positive ripple effect of what this plant can do for
Right.
medicinal purposes, okay? And when I ask them to further visualize their stance in this industry is when you look at an inventory, your shelf, right, and you look at it, I know you see great products that are going to do a great, wonderful benefit to the community, okay? I want you to look at it from an accountant's point of view, my view. I want you to see stacks of $20 bills, okay, as you're stacking your inventory, you're counting them out. And I want you to imagine that you're going to triple that stack, okay? And in my world, it's called an inventory turn ratio. How fast will this get to a patient that will order it, and then it'll convert my current stack of $20 bills to 3 times that, or maybe 4 times that. And the reason why I hone in on that movement of cash and getting them to visualize that those inventory stacks of cash is I don't want them to get too emotionally bound to a product that, let's say, isn't moving as fast enough. Because at the end of the day, it is going to be about the business and turning that inventory and converting that back into cash. So getting your accountant to kind of help you understand what inventory movement is like, right, in their inventory back office warehouse versus just looking at the end sales and the profitability per product, that's usually where they focus their energy on. And I'm telling them, look, I think we in California are really at the epicenter of a lot of brands and a lot of emerging new products, and working with a great software that can hone in on where these brands are headed. And we've talked about this in the industry about brands needing to get a return on investment from marketing dollars. I see it, you see it from a marketing perspective. The accountant in me is trying to share with the retailers. A quick analogy is, have you ever heard your parents say, show me who your friends and then I'll show you who you are? Right. So for cannabis retailers, they say, look, show me the brands that you're carrying and then I'll show you your patients.
Right.
And so if you can't show me that inventory turn that's happening fast enough, then you made a mistake for your patient base. You can't be the retailer for every patient. So you'll eventually find your niche. And when I speak to them about, what we've been talking about, the branding software platform, I use that same analogy saying, you're the cannabis delivery company. Show me the brands. If these brands are in play with you, working with a software package that can give them that return on investment for their marketing dollars, but more importantly, help you turn to the patients that you already are helping out, it's a win-win. So I see the future of a lot of cannabis deliveries working and partnering up with what you guys have been working on a lot.
Appreciate that, thank you. But so what what you're saying is, if the retailers that kind of find their niche, right, find their niche audience. I mean, even like you and I, right, like you found a niche, or we found the niche in cannabis. I wasn't always making software for cannabis. Right. You weren't always an accountant for cannabis, but we found the niche and we picked it. And then we started seeing success. So retailers in the space, they find a niche with their patients, they pick it, and they continue doing that and what's working for them. Then they're profitable, even though they do have a lot of these hurdles to run through.
Absolutely, and I think that it's going to get to a state of maturity where cannabis delivery companies that are already using, let's just say WebJoint, for example, they're going to want to partner with their friends because it aligns with what they are, their identity. And they're going to align with those brands that are using the branding software that you guys have been working so hard on.
Right.
Why? Because there's a synergy there.
Right.
I want to partner with the same people that are on the same team as me,
Right.
going after the same goals.
Right. And going after the same people and
the
customers
same
and
people.
patients. Right.
So why am I going to use a lot of my time and energy with a brand that isn't on board with the patient base that I have, and more importantly, trying to minimize the amount of sales acquisition costs getting to the patients that I already am passionate about servicing, my niche.
Right.
So I think the industry is going to mature that way, and these synergies are going to happen very, very quickly because it's going to make so much sense to both parties.
What do you think about the taxes? Like, do you ever see that getting better? Do you ever see that changing, or what needs to happen in that sense?
I think patients need to advocate for themselves and start telling their elected officials how they feel about paying, a 60% type of tax over a retail price when you start adding in compliance costs and other costs and this type of cost. It makes no sense. I mean, I can't think of one product that we tax more than we do for cannabis. And I went on TV, this is a couple of years ago, and I was trying to explain to one of the anchors there, do you know the cost of one cigarette can be, for a pack, can be less than $1. But if you were to, God forbid, buy a joint, it's $15. One has been proven to kill you, cause cancer, and the other one doesn't. So it doesn't make sense. So for me, from a tax perspective, I think a lot of people need to be more aware. The more patients that use this as a medicine, I think they're going to be more upset about why are we being taxed so heavily. The end product shouldn't be $15 for a joint. It should be closer to 50 cents,
Right.
compared to a cigarette.
Right. That's why I'm all for the medical market as well, because I feel like that's kind of what pushes the conversation forward, and the people using it medically, it's a medicine to them. So why are they paying that much money for their medicine? But also we live in America, and the healthcare system here. But I guess
it's another side note. But I mean, I don't know if you've heard the recent conversation from professional football players.
Mm-hmm.
They want to have access to their medicine. Think
Right.
about how many times they get hit in the head or shoulder or whatever.
Yeah.
We know that it's not a performance enhancing drug.
Yeah.
But if their doctor would much rather prescribe something cannabis related, think about the pros and cons to that professional athlete. And now the commissioner, they're actually really considering it, going, why are we banning it? It doesn't make any sense.
Why are they banning it? I don't know.
Yeah.
Doesn't make sense to me.
Yeah.
So we talked about a lot of different things in this conversation, but just to kind of summarize it all, what do you think the top 3 things are that a cannabis retailer or brand needs to watch out for? And top 3 tips that you could give for those people in the cannabis industry?
The top 3, that's a good question. The first I would recommend is really know your customer. You cannot be a retailer or a brand to everybody. And once you hone in on who your true buyer persona is and who you are really passionate about servicing, a lot of everything about your operations is actually going to be a lot clearer. That would be number 1. Number 2 is I would recommend cannabis brands and retailers to work with their accountant on what are the key financial metrics that matter most to make that service to that buyer, that customer that they're so passionate about. What measurements do they need to be focusing in on? I already know my metrics that I love, and I've mentioned it earlier about the inventory turn and all that good stuff related to inventory and also loyalty programs. And then the third item I would recommend to cannabis retailers and brands is be careful about your cash flow, because we are in a mainly cash business, and I've already seen many people get burned on not having enough cash being present when they actually owe a tax bill or, God forbid, they owe payroll. So that would be the other third little tip I would recommend for cannabis brands and cannabis retailers.
That wraps up another episode of Connecting Cannabis. Thank you so much for joining us, Sonia.
Thank you for having me.
Of course, why don't you go ahead and plug into this camera where people could find you. If they love this video, they could check you out elsewhere.
Awesome, thank you. Well, I hope you get to find me on LinkedIn, Sonia Luna. You can also check us out at www.avivaspectrum.com, and we're also on Instagram at Aviva Spectrum.
And of course, for us, just WebJoint.com. Subscribe to our newsletter there. Just put in your email, and you'll get all of our Connecting Cannabis episodes. All of our blog posts, just educational cannabis business-related content. On Facebook, we're just at WebJoint. LinkedIn, you can find us there. YouTube at WebJoint, and you guys know the rest. So thank you for watching, and until next time, we'll see you later. Awesome. Success.
High 5.
Nice.
Awesome. So proud.
Thank you, Sonia.